Hello everyone, welcome back to Chill Deal Trades, where I make it my job to analyze stocks so that you know what's going on in the markets. Today we are going to be covering SoFi. If some of you don't know what it is, it's basically an online lender slash refinance platform that has got quite a bit of hype since it first became a SPAC and now has reverse merged and is under the stock ticker SOFI. We're going to break down more of the short-term price action today, as well as a couple of the long-term factors to keep an eye on if that's more of your game plan for the stock. If you find anything beneficial from this video, please hit the sub button and join the squad. We're growing pretty quickly, and so the more people that join, the better the videos get, and we all can hopefully make some more money. So let's jump into it. So this stock is going to be very volatile in the near term, and a couple reasons why. One is they have a share lockup expiring soon, so some people who originally got into the SPAC before it kind of reverse merged, they can have the option to sell some of their shares. There's just a lot of positive and negative news going on, and so that typically creates a lot of volatility. And when you look at these candles over the last couple weeks, that's what we see. When you see these really big candles, that typically means there's a lot of volatility because the price action is moving a lot. And so this is something just to keep an eye on, as you really need to define your strategy moving forward on this stock, because it can easily move $1 a day, if not more, both to the upside and downside. So a couple things in the long term we want to look at is, right now we're making lower highs. So we had a high back here at around 27. It came down and made a lower high. So we're still in a long-term bearish momentum for this stock, and we can kind of confirm that with RSI. So here you see when RSI is hovering below 50, then we're in a bearish phase. When it comes above 50 and hangs around there, we're in a bullish phase. And so we saw it peak up on this run, but it broke back below. So what we're going to want to see on RSI, if we are going to see a long-term reversal for this stock to continue higher, is something like this, and then it's going to move around here. That's really what we want to see there, and that's going to, I would say, one of the factors that's going to help us realize if we're out of this bear phase of the stock and lower highs. And then obviously eventually we have this more long-term downtrend line that eventually we're going to want to break out of, and it seems like that might be somewhere in the July-August range that we have the potential to test and break out of that again. Those are the couple long-term things I would suggest you take a look at for the stock. More in the short term, we're at a couple important points. So obviously we had a big pullback last couple of days, and then we had a big volume come in the last 2 days. I think it's the most, basically the most since the initial, when they told us that it was going to be SoFi that the SPAC merged with. And so we had the biggest volume today. Don't be tricked by this big green candle. When you look on the hourly, we actually see a lot of red in there as well. So there was just a lot of buying and selling. Early in the day we had a lot of selling, and then late in the day we had a lot of buying. So just keep that in mind. This wasn't all buying today. There was a lot of selling going on, and that's important to know that. Even though we see this big red candle, people did buy the dip, but there were a lot of people selling, and so that's going to increase the volatility moving forward. When we zoom in, what we see is we're between the two 50-day. So one's an EMA, one's an SMA. And we're kind of in that price range. And so we're going to want to see a confirmation to the upside or downside to determine where the stock wants to move on the daily chart. The 100 days are also very similar spots. And so we're going to want to see it eventually confirm above this 50-day if it wants to move higher. Or if it breaks below the 50-day and this trend line, then there's probably some more downside. Something really important that happened today was, even though we saw this big green candle, we did see we opened at basically the top of this consolidation range in the past. So when we go in here, we see this is a very volatile stock, so it's kind of hard to kind of figure out the technical indicators. But we kind of see like this back and forth in this range. And as soon as it broke out, and then it came back and tested that breakout, which is really good. That's a really positive that there was enough buyers to keep it out of that past consolidation zone. And so that's a short-term positive indicator for this. I would say for the upside, what I'm going to want to see is we really need to break out above. Let me bring my little notes out here so you can read it with me. But we really need to break above the $9.90 to $20 range. you see that there's both of these past 2-day wicks, top of the wicks, hit around that $19.90 or $20 range. And so we're going to want to see confirmation above that. This kind of green smaller, we have a lot of times where the stock tried to break above and or consolidated in that range. And so we really want to see volume continue to come in and break above that. If we do manage to break up above those wicks, I'm going to be looking for this gap fill here, which is at, it's at 2082. So take a look at that gap fill, and that gap is really important because we also see it in the past it be a point of resistance and support. And so the more times a price access support and resistance, the stronger it's going to be to break out. The harder it's going to be to break out. So we have like 1 candle, 2 candle, 3 candle, 4 candle, 5 candle, 6, 7, 8, 9, 10, 11. Basically like 11 times the price action moved around that kind of 10 or $20.80 range. And so if we do break above these last 2-day top of wicks, we're going to be looking for that fill there. If we do get that high, I do expect it to have like another pullback in volatility. So I would say if we do push up higher, we're going to want to keep these trend lines and kind of go more in this pattern. We don't want this thing to break off unless you're trading in the next week and you're trying to make some quick money. We really want this to continue this lower degree of upward movement, as that's going to be more bullish for the long term for this stock. But those are my price ranges. I think if we do break into the gap, there's going to be a lot of volatility back and forth like we had in the past. That's probably going to be similar. And then if we do break above, we really need to break this long-term downward trend line. And if we do break that and we do break these all-time highs, then we kind of confirm that we're not in a lower high, and we're actually in a higher high, or low higher highs and higher lows. So that's a trend reversal off this low here. At the support side, I would say the biggest support is at this 1820, so where we opened on today's candle. As you can see, I kind of put that as the top of this consolidation range on this kind of green area. So really want to hold it there. I would say if we do come back to that price, if you're more of a short-term trader, you might want to use that as a stop loss. And if you're a long-term trader and you want to buy more shares or buy shares for the first time, that would be a great buy zone opportunity. If it does come back kind of like this, we do want it to hold this new trend line. It doesn't hold a ton of weight because it's a brand new trend line, but we are trying to form a new uptrend, and that's important. If we do, break below that 1820 and this trend line, it seems like one of the areas there could be a bit of support is between the $17.15, so $17.15 and $16.50. That the $16.50 is the middle of this consolidation zone, and there was just a lot of support kind of at that $17.15 kind of range. So those are the potential downside areas of, if you continue to want to add more shares, those would be positions for you to potentially dip buy, because when we zoom out, we do have a long-term trend line here that's been holding, and so there is an opportunity if this comes back down something like this and holds that trend line, then these price points back here are potential dip buy opportunities. But if we break below this long-term trend line to the downside, something like this, we're going to want to either look for a double bottom, or this is actually lower highs and we're going to see a lower low happen here somewhere down here. So that's a really quick analysis. I didn't want to make this video too long, but I hope you found something extremely beneficial from it. Look at those dip buy areas. Look at the areas to potentially put a stop loss if you want to mitigate your risk, and as well as where some areas to the top side that we could potentially hit in the short term. So yes, like I said, hope you enjoyed it. Please like, please sub, join the squad. I also have a Discord community that we're slowly building. We have about 30-40 people in there now. That will be in the description, as well as I stream weekly on Twitch. So Saturday nights, me and my buddy, we game and we talk about the stock market and what's going on, more of kind of a big picture. And then on Sunday nights, which I did last night, it's a free-for-all where you can come in there and ask me any stock you want me to chart, and I'll do what I did in this video live on that live stream. So again, I hope you enjoyed and everything, and I'll see you again next time.